So another swing trade which I took was on the euro dollar. It was based on the trend setup. It was based on this uptrend and on this volume peak within the uptrend. I waited many months for the price to make it back to this level. It was over a year actually. And when the price hit it, the price went past the level a bit. This is where I had my stop loss. And as you can see, the price actually hit the stop loss, but a daily candle did not close below the stop loss line. So I did not quit the trade, I held it, and I was able to take a full profit somewhere in this area, somewhere in here. Now with volume-based take profit, the best place to quit the trade would be in here at those heavy volumes. Alright, this would be the ideal volume-based take profit. Now the next trade was on Canadian dollar Japanese yen. It was based on a rejection of higher prices in here. So I used the profile like this, and there was significant volume peak right there at this level. So this was the entry point, stop loss was in here, and this was the take profit. Alright, so this was the reaction, and this is where I took the profit. Now I'm not really into taking levels like this one. I also like the heavy volume peak to be within the rejection area, like in here. Alright, this is not really what I would like to trade. Also, this looks more like the trend setup. If you look at it closer, there was a buying activity, rotation, the price went downwards, tested it, and made a reaction. So those volumes are already spent. Anyways, let's go into the next trade. This one is on the euro Japanese yen, and this one was based on volume accumulation setup. It was based on heavy volumes which got accumulated within this rotation, after which this strong sell-off started. The stop loss for this trade was above this swing high, above this swing point right there, and the take profit was somewhere in here. So the price hit the level right there, there was a little rotation, and then the price hit the take profit. If I remember correctly, I missed this take profit by just a tiny bit, maybe just like a half a pip or a pip. So I still held the trade. There was this little reversal, and after 2 days I took the profit in here with this candle. Now if I were using the volume based take profit, I would have used the flexible volume profile like this over this pullback area, and there's a significant volume peak in here, so the take profit based on volumes would be in here. Alright, a little bit below my original take profit. Now this is the British pound, again a daily chart. There was another swing trade based on volume accumulation setup in here. It was based on those heavy volumes. This was my level where I went short. Unfortunately, there was only a small reaction which did not make it to my full profit target, which was in here. Stop loss was above this swing point, so there was the stop loss line. It got hit. I did not quit that trade, I held it because I trade with the alternative stop loss method, but afterwards I got stopped out with catastrophic stop loss somewhere in this area. Alright, so this one was a losing trade. So the next trade which I took was on the Australian dollar Japanese yen. The level was based on the volume accumulation setup. This level was very nicely visible. There was the rotation followed by strong selling activity. Heaviest volumes within the rotation were in here, so this is where I went short from. Now the stop loss for this level was in here above this swing point, and the take profit was in here with risk reward ratio 1. So the next day I was able to take a full profit from this trade. Alright, now if I were using the volume based take profit, I would have used the profile like this, or I should say like this. And the take profit, the ideal take profit using this method would be a little bit before this heavy volume cluster, so somewhere in this area, which by the way would be a quite nice winner, much bigger than the one which I took. So the next swing trade was on the US dollar Swiss franc. It was based on the volume accumulation, and heavy volumes accumulated before the start of this strong buying activity. The heaviest volumes were right there. The stop loss for this trade was below this swing low, so it was in here. Take profit was somewhere in this area. Now initially the price went my way, did not reach the full profit, went against me, did not reach the stop loss, went against upwards. And this candle, this was a strong macro news concerning interest rates. So I quit the trade before this macro news came out. I quit it somewhere in here. So I had like 60 or 70% of the full take profit. Now, if I were using the volume-based take profit, I would have looked into this whole area, and the best place to quit the trade would be in here, a little bit below the level. So I would have actually quit the trade at the best possible place before the news release. All right. Now here comes a series of losses. I took 4 losing trades in a row. The first one was on the Australian dollar Japanese yen. It was based on the trend setup. There was this volume cluster. I went long from there with stop loss being in here. As you can see, there was no reaction to the level. The price went past the level, past my stop loss, and I quit the trade with the catastrophic stop loss somewhere in this area. Now the next losing trade was on Canadian dollar Japanese yen. It was also based on the trend setup. I really like this level because there was a significant volume cluster in here. There was also resistance becoming support setup in here, but the price just reversed and went into aggressive sell-off without any reaction to the level. So I took a losing trade. The stop loss for this trade was in here below this swing point, and when the daily candle closed below that, I manually closed the trade in here. Alright, so that was another losing trade which I took, second in a row. Now very similar case was on the Swiss franc Japanese yen. There was also an uptrend with significant volume peak, significant volume cluster in here. Also very nicely visible, and also the price just turned and went into a selling activity, completely neglecting the level. The stop loss was below this swing point right there, and in this case I took the catastrophic stop loss, which was somewhere in this area. Alright, so that was a third losing trade in a row. There's one more. This one was on the US dollar Swiss franc, and this one was based on the trend setup. Also the level was very nicely visible right there. There was a short from there, no reaction at all. The stop loss was in here above this swing point, and I took a catastrophic stop loss somewhere in this area. So that was a fourth losing trade in a row. After that I started winning again. The next trade which I took was also on the US dollar Swiss franc. It was a short from 99.40 from here. The trade was based on the volume accumulation setup. It was based on massive volumes accumulated before start of this selling activity. By the way, this level was also very nicely visible on the yearly profile. It was a yearly point of control, as you can see in here. Heaviest volumes throughout the whole year got accumulated at this level. This was the reaction to the level. Stop loss for this trade was in here, and take profit for this trade was in here. So this was the trade which I took right there, this movement. Alright, if I were trading using the volume based take profit, I would have used the flexible volume profile over this area. Now the take profit would be in here, or actually few pips before this level, somewhere in here, and I would have probably missed it. But anyways, I took my profit in here. Now the next swing trade which I took was on the US dollar Japanese yen. This one was pretty crazy. It was based on the trend setup. It was based on this uptrend. And there was this volume cluster in here, heaviest volumes being right there. And the stop loss was pretty tight. It was in here, and with risk reward ratio 1, the take profit was in here. So it was pretty tight trade, as you can see. This was the reaction, very small one, but I was able to take a full profit from the trade. If my take profit was any bigger than that, then it would be a losing trade. The price would just go past the level. But as you can see, even in strong sell-off, the price reacted to volume cluster, which I was able to pinpoint with the volume profile. Now I should also mention the volume-based take profit, right? In this case, it would be in here. So the entry point would be here. This would be entry point. This would be the take profit. You wouldn't be able to take it, all right? With a volume-based take profit, this trade would have ended up as a loser. Now the next trade which I took was on the Australian dollar, Canadian dollar. It was based on the volume accumulation setup. Heavy volumes right there in this rotation. There was a strong sell-off. So I went short from there. As you can see, there was no reaction at all. The stop loss for this trade was at this swing point, so there was a stop loss. I did not quit the trade when the price hit the stop loss. I quit it in here, where the daily candle closed past this stop loss line. Alright, that's the alternative stop loss method, which I use for all my swing trades. Now the next trade which I had was also on the Australian dollar, Canadian dollar. It was a short from 97.46. It was a short from here. The trade was based on this very nicely looking volume accumulation. Those massive volumes accumulated before the start of this strong selling activity. My stop loss was at the first swing high, this one. So this line was my stop loss line. And as you can see, I was able to pinpoint the turning point very nicely. There was the reaction to the level. My take profit was pretty tight, somewhere in this area. So I took the take profit the next day. But if I were using the volume-based take profit, profit would be much bigger. It would be in here. So with volume-based take profit, I would be able to take this whole selling activity. As you can see, afterwards the price reacted very nicely to it, to those volumes. Alright, so this would definitely be a nice place to quit this trade. Now the next trade which I took was a pretty cool one. It was on the euro dollar, and there was a level which was a pretty old one. It was based on the trend setup. It was based on this crazy uptrend and on this massive volume cluster created within the uptrend. Now the heaviest volumes within the volume cluster were right there at this line, and this is where I went long. The stop loss for this trade was below this swing point. Somewhere in here was the take profit. Right there. Very nice reaction, right? Now with volume-based take profit, let me show you where the profit would be. I would have selected this whole pullback area, and the ideal place for take profit would be in here at this volume cluster. Alright, so that would be much bigger profit than the one which I actually took. Still, if you look at the trade, it was a pretty cool one, because as you can see, the level got formed in June 2017, and I took the trade in November 2018. That's almost 1.5 years afterwards, and the reaction was spot on. It's pretty cool, right? I always say it, markets have brilliant memory. Now the next trade which I took was also on the euro dollar. Right there was a strong selling activity, And within this selling activity, there was a nicely visible volume cluster. In here, this one. Apart from that, the price also rejected this level in the past, meaning that it was a support, and when the price went past it, it became a resistance. So that was a confirmation of the level, right? So this was the short. The stop loss was above this swing point, and in here there was the take profit. Right there was the reaction to the short. I was able to take the profit within just 2 days. Now let me see if there was any place for ideal volume-based take profit. I'm not sure it would be visible in here. Now I don't think, not really. Alright, so in this case it would be just better to use the risk-reward based take profit. Now the next trade was on New Zealand dollar, Canadian dollar. There was a selling activity right there and volume cluster in here. Now I think that this level wasn't the best of the levels, did not really work. The price rotated above it for a few days, and afterwards those aggressive buyers just pushed through. So this one ended up as a loser. Stop loss for this level was above this swing point right there. First, the price just touched it. I stayed in the trade, but afterwards price went against it, and I closed the level when it hit the catastrophic stop loss somewhere in this area. By the way, if this level worked and there was a reaction, then the best volume-based take profit would be at this volume cluster in here. Alright? Now the next trade which I took was on the New Zealand dollar. US dollar, there was a strong buying activity. So I was looking for the trend setup for significant volume cluster created within a trend. There was one just in here. By the way, it's also visible if you look at it just like this. Alright, but this way it's better. It's much stronger, much better visible. So this was the level to go long from. The stop loss for this trade was below this swing point. So it was in here, right there. There was the stop loss. And in here there was the profit target. I was able to take the full profit just 2 days after the trade entry. Now with volume-based take profit, it would be best to take the profit exactly in here at this volume peak. As you can see, this is actually the turning point, so that would be the best place to quit the trade. So the next trade which I took, the next swing trade, was on the US dollar Japanese yen. It was based on a rejection setup. It was based on this strong rejection of higher prices, which indicates aggressive sellers entering the market. Now I used the flexible profile over this area. As you can see, there was a significant volume cluster in here. So there was the level to go short from. And the stop loss for this trade was at the swing point at this high. So that was the stop loss in here, and the take profit was with risk reward ratio 1 somewhere in this area. So this was the take profit which I took. Now if you were using the volume based take profit, you would have used the profile like this, and the best place to take the profit would be in here, or a little bit before that actually, so somewhere in here. I'm not sure if this trade would be a good one to take like this, because you see, this is what you risk, and only this is what you're going to get if you win. This is a pretty negative risk-reward ratio. So I personally wouldn't have taken such a trade. In this case, I would prefer to take the risk-reward based take profit, which was in here. Or another option would be to take the second support as the take profit. So it would be in here, this volume peak, alright? You would just pray that the price would go past this area and take the profit in here. That would also be a viable option in this situation. But let's have a look at it like this way, alright? Absolute no-brainer would be to quit in here, alright, at those heavy volumes. this was a strong support. Heavy volumes created in this rotation, that's basically the volume accumulation setup. You don't want to go against it. As you can see, the price turned and made a very nice reaction to it. Now the next swing trade was on the Australian dollar, Canadian dollar. It was based on the trend setup. It was based on this trend. So let me use the flexible volume profile over the trend area. And it shows that there were massive volumes in here. Now, there were also volumes right there. Those volumes get formed in this area, which got tested. This area, this one, got tested in here. Alright, so those volumes were tested. So we are only interested in those volumes created in this area, which were not yet tested. You can also see those volumes if you select only this area before this buying activity. Alright, so this is what the level was based on. The price retraced back, reacted to the level pretty nicely. The stop loss was in here. Take profit with risk reward ratio somewhere in here, a little bit lower in here. So that's where I took the profit. Now, if you are trading using the volume-based take profit, then your take profit would be in here and the price would not reach it. So that would not be a full winner. In case like that, it would be best to secure your position when the price hits this level, this risk reward ratio 1 level. Secure your position below the reaction point. So it would be in here. You would secure by moving stop loss to this level. Then the price turned and you would quit the trade in here with minor loss. That's how I would have traded it if I were using the volume-based take profit. Now let's go into the Australian dollar Swiss franc. There was another swing trade. It was based on volume accumulation setup. The level was based on those heavy volumes. This was the level where I went long. Stop loss was below this swing point. As you can see, the price just went past the level without any reaction, so I took a losing trade there. Let me see where the price actually closed. Yeah, the daily candle closed below the stop loss. So this is where I quit the trade, alright? At this level, like 1 pip below my standard stop loss, which was in here. Now there was also another losing trade. This one was on the Australian dollar Japanese yen. The price was going upwards, so I was trading the trend setup. I used the flexible profile like this. There was the long. Also, there was a confirmation, resistance becoming support, but the price did not react to the level and went instantly into stop loss. My stop loss was in here. So when this candle closed below the stop loss area, below the stop loss line, I quit it, right in here, like 2 pips below it. Now, pretty cool thing to notice is that the price made it back to the level and actually made a reversal reaction. You probably also noticed that on some of the other trades. As you can see, not only the price reacts as a reversal to intraday trades, but also there are sometimes very nice reactions as a reversal trades on the daily charts with swing trading levels. Now let's go into the Australian dollar, New Zealand dollar. There was another swing level. It was based on the rejection setup, rejection of lower prices, and on those massive volumes which got created within the rejection. The heaviest volume peak was in here. I hope you can see it. I waited for quite a long time for the pullback. Unfortunately, the price did not react to the level. My stop loss, which was in here, got hit, and I took a losing trade. I took a catastrophic stop loss somewhere in this area. Now, if the price turned, if the price reacted, the take profit based on volumes would definitely be in here at this price level before the price reached those massive volumes, alright? As you can see later on, the price reacted to this level very nicely. Now the next trade which I took was on the Euro-Japanese yen. It was based on this rejection of lower prices, so I used the flexible volume profile to look into the rejection. As you can see, there were pretty massive volumes in here, so this level was pretty straightforward. Unfortunately, the reaction was just a small one. The stop loss for this trade was in here, and I took a stop loss there. I took a catastrophic stop loss somewhere in this area. The reaction just wasn't enough for me to take the profit, so when the price turned, I took a losing trade somewhere in this area. There was a catastrophic stop loss there. Now the next trade which I took was on the New Zealand dollar, Canadian dollar. It was a first trade of a nice winning streak. I took 10 consecutive winners, and this was the first of them. The level was in here, and it was based on massive volumes which got accumulated before the start of this selling activity. So this was a nice case of volume accumulation setup right there with heaviest volumes at this level. The stop loss was at this swing point, and somewhere in here was the take profit. So what happened is that the price did not really respect the level, hit the stop loss, but did not reach the catastrophic stop loss, and also there was not a daily close above the stop loss level. So I held the trade. It was a crazy trade, but I held it. And after a month, there was this sell-off and I was able to take a full profit. Now, if you would prefer to take the take profit based on the volumes, then the best place to quit it would be a little bit before those massive volumes. So very roughly at my take profit level, which was, by the way, based on the risk-reward ratio, not on volumes. But in this case, those two profit targets would overlap, would be the same. Now the next trade which I took was on the Australian dollar, Canadian dollar. It was a pretty crazy one. It was over in just a few minutes. It was based on volume accumulation in this area, followed by strong buying activity. As you can see, there were massive volumes in here. So there was the level to go long from. And then there was this crazy spike move. This one, I had the limit order there, and I was out of the trade in just a few minutes. There was a quick reaction to the level, very sharp one, very precise one. So I was out of the trade before I even noticed that my limit order got triggered. The next trade which I took was on the US dollar Swiss franc, based on volume accumulation setup. It was based on those massive volumes in here, which were followed by selling activity. So this is a sign of sellers accumulating their selling positions there. At the highest peak, there was the short. The stop loss for this trade was in here at this swing point. So there was the stop loss. And the take profit was roughly in this area, somewhere in here. And this was the reaction. So there was another winner. If you are taking your profit using the volume-based system, then it would be best to quit the trade somewhere a few pips above this line, all right? Above this volume cluster, so somewhere in here. And then, for example, for the second take profit, in here, this volume cluster. As you can see, this volume cluster actually turned the price. So it would be very wise to quit the trade before the price reached this volume cluster. Now the next trade was on the British pound. It was a pretty funny one, or I should say interesting one. It wasn't that funny. There was a strong buying activity, strong uptrend, and there was this nicely looking volume cluster. So I went long from there, and stop loss was at this swing point right there. This was the stop loss line. Now, what wasn't really funny was that the price actually opened below the stop loss. But afterwards, there was a quick movement, price reversed, and I was able to take a full profit, which was somewhere in this area. Now, with volume-based take profit, the ideal place to quit the long would be in here at those heavy volumes. Actually, a little bit before that. Now, there was a pretty cool trade on the Swiss franc Japanese yen. It was based on massive volumes which got accumulated within this very long rotation. Stop loss for this trade was a pretty wide one. It was below this swing point, and the take profit was in here. The reaction was pretty spot on. This was the reaction, so I was able to take a full profit after a few days in here. Now let me check if there was a nice place to quit your trade based on volumes. I'm not sure about that. I guess in here at this volume cluster. Yeah, that would be the best place to quit your trade based on a volume-based take profit. Now, another very nice trade was on the US dollar Japanese yen. There was an uptrend in here, so I used the flexible volume profile over this area, and there was this nicely looking volume cluster. And this was the entry point. What I also liked about that was that the price reacted to this level in the past. So this was a strong resistance. When the price went past the level, it became a support, confirming our volume-based level. Alright, so when the price went back to the level, I went long with pretty tight stop loss in here, below this swing point. And the take profit was also a pretty tight one. I was trading with risk-reward ratio 1, so it was in here. I took the profit right there. If I were trading using the volume-based take profit, then the ideal place to take the profit in this case, let me check, would be in here. Or maybe partial profit also in here. This is not that significant area, but there was this support becoming a resistance setup, which makes this level stronger. As you can see, there was a reaction to the level. So, for example, take a first half of the trade out in here and the second half in here. Alright, so that's the volume-based take profit. Next winner was on the Australian dollar US dollar. There was a trend setup in here, right there, within this downtrend. And this level was pretty cool one. I really like this one. There was this volume cluster pointing to go short from there. Also, there was this nice rejection of the level in the past, meaning that it was a strong support. When the price went past it, the support became a resistance, so there was nice confirmation of the level, also very nice reaction to the level. The stop loss which I had was in here at this swing point. I was trading with risk-reward ratio 1, so take profit was in here. There was a take profit. With volume-based take profit, it would be best to quit the trade in here or a little bit before that, so in here. Alright, so with this approach, the result of this trade would be slightly better. Now the next trade which I took was a pretty crazy one. It was crazy because I went long against aggressive sell-off. The level which I had was based on volume accumulation setup. It was based on massive volumes which got accumulated before this strong buying activity. As you can see, the volumes were the heaviest in here. So the level to go long from was in here. The stop loss for this trade was below this swing point, below the wick of this candle. So there was the stop loss. It was a pretty tight one if you compare it to strength of this selling activity. And so was the take profit. It was also a pretty tight one, as I was trading with risk reward ratio 1. As you can see, there was a reaction. It was a small reaction, but big enough for me to take a full profit. Afterwards, the price just reversed and went downwards, but I took a full profit, even though I went long against this crazy strong sell-off. Now, in cases like that, it's always best to just have limit orders in your trading platform. Don't look at the chart, because if you look at this thing coming, you probably wouldn't enter along there, right? You would be scared to do it. But if you have a limit order there, then it's easier to enter the trade, because you just enter it automatically. You are already in the trade, and you don't need to analyze the charts again and think whether it's better to enter or not. So this is one of the reasons I used limit orders for entering my swing trades. So I don't have to think whether I want to enter the trade or whether it's too crazy and it's too risky and I'm too scared. This way I just always enter the trade. I found out that this suits me better. Now the next trade which I took, another swing trade, was on the New Zealand dollar, US dollar. It was based on the trend setup. There was a strong sell-off. And within this selling activity, there was this nicely looking volume cluster. Also, there were nice rejections of this level in the past, meaning that the level was a strong support, and when the price went past it, the support then became a resistance. So that was a nice confirmation of the level. So I went short from there, from the place where the volumes were the heaviest in here. So this is where I went short with stop loss in low volume area. I used stop loss in here. I did not use the swing point in this case. The swing point would be in here, but this would just be too tight, you know. So that's the reason I decided to use wider stop loss, because with swings your trades just need some room to breathe. Now the price went past this level a bit. If I used this stop loss, then it would be a losing trade. But because of the wider stop loss, there was enough room for the price to turn and to start a new selling rally. So I took a winning trade. Take profit was in here. Now with volume-based take profit, the ideal place to take the profit would be in here. Actually, this was a very nice place to quit the trade, because there was also this strong resistance which became a support when the price went past it. So this was a strong zone, but the price went past it. It did not react to it, fortunately enough for me, because otherwise I wouldn't be able to take the profit. But in this case, the sell-off was just too aggressive for the buyers to turn the price. So the price went past this volume cluster and I took the profit in here. Now the last trade of this winning streak of 10 consecutive winners was on the US dollar Canadian dollar. It was based on this downtrend. I used the profile like this to identify the heaviest volumes, the volume peak in here. So this was the level to go short from. In this case, there was not a swing point which I could have used for a stop loss, so I used this place. This is where the heavy volumes ended, the high of this candle. So this was the stop loss, and I was trading with risk reward ratio 1, so the take profit was in here. This was the reaction. Now with a volume-based take profit, the ideal take profit would be the same as I used at this volume cluster. Alright? Also, you can notice that this level worked as a strong resistance in the past. The price reacted to it 3 times, which means that it was a strong resistance. When the price went past it, it became a strong support. As you can see, it worked as a strong support. The price bounced off that support and went into strong buying activity. Now with this trade on the Australian dollar Japanese yen, the winning streak ended. There was volume accumulation in here. There was a level from which I went long with stop loss in here. I thought that this downtrend could be over because there was a volume accumulation and afterwards aggressive buying activity in here. But it seems it wasn't, and the price just went past my level, and I took a catastrophic stop loss somewhere in this area. Now, if there was a reaction, if there was a buying reaction, then the ideal take profit would be in here based on those volumes. All right, so a little bit below this line, that would be the ideal volume based take profit. Now, another swing trade which I took was on the Canadian dollar Japanese yen. It was based on the trend setup right there on this selling activity. It was based on this volume cluster right there. So this was the short level, and there was an opening gap which got filled, and afterwards the price reacted. There was a selling activity. I was able to take a profit in here. By the way, the stop loss was at this swing point right there, but the price reacted pretty nicely there, so I took the take profit the next day. Now, with a volume based take profit, it would be best to quit exactly at the same level in here before the price reached this volume cluster. All right? Now, there was also another trade on the Canadian dollar Japanese yen, another swing trade. That was a long. It was a long based on the volume accumulation setup. There was volume accumulation setup in here, strong buying activity starting from heavy volumes. So this was the level from which I went long. The stop loss was in here. It was at this swing point. The price did not react to the level, so I took a losing trade. It was a catastrophic stop loss, which I took in here. Now, if the price turned, if the price reacted to this level and went upwards, then the ideal volume-based take profit would be in here. All right, or a little bit before that. So let's say in here. If you wanted to be really sure not to risk anything, then in here before this volume cluster even started. All right, so right there. This would be the safest volume-based take profit. So now the last trade of this video is a swing trade on the New Zealand dollar, Canadian dollar. The trade was based on rejection setup, rejection of higher prices in here. I used the profile like this to identify heaviest volumes in here, so I went short from there. The stop loss was at this swing high, and take profit was in here. I was trading with risk reward ratio 1. Reaction was pretty nice one, so in here I took the full profit target. Now with volume based take profit, it would be best to quit the trade in here, a little bit above it, so in here. All right, that would be a good place to quit the trade. If you wanted to be extra sure, then before this volume cluster. So basically that would be at the place where I actually quit the trade. It will be in here. Actually, I think it would be safer because there was also this rejection of higher prices. This was the resistance, which became a support when the price went past it. So it would be safer to quit it in here. As you can see, the price just went downwards past all those levels without any reaction. So the sellers were clearly pretty strong, but still it would be safest to quit the trade in here, at least with part of the position. Alright, so that's for this video. I hope you guys found it interesting. And this is also the end of the swing trading section. And I hope that you learn a lot of useful stuff in here, and I hope that you will start using trading with swing trades. I think that this is actually the best way to start trading if you are, for example, learning to trade. I would definitely skip intraday trading and focus first on swing trading. I think that this is the best way to start learning to trade and to become consistently profitable. Alright, so that's for the video, guys, and I'll see you in the next one.